Good afternoon, investors. You are now on Kleverstock with me, Anunjarya, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened lower in early trade on Wednesday, tracking weaker cues from Wall Street overnight as technology-related stocks retreated. At 9:10 a.m., the FPM KLCI fell 4.70 points, or 0.28% to 1,679.83 from Tuesday's close of 1,684.53. The benchmark index had opened 2.75 points lower at 1,681.78. The market breadth was negative, with decliners outpacing gainers 119 to 106. A total of 279 counters were unchanged, while 2,182 were untraded and 41 suspended. Turnover amounted to 86.18 billion shares valued at 41.84 million ringgit. Rakuten Trade Sdn Bhd Vice President of Equity Research Tong Pat Lang said Wall Street ended weaker as sentiment was weighed by the latest Federal Reserve minutes, which signaled growing divisions over the pace of future U.S. interest rate cuts. On the domestic front, he said the local market's undertone remained resilient, underpinned by persistent accumulation by local institutions despite continued net foreign outflows. He said retail participation, however, has been weak. As reflected by low daily volumes, we believe this may improve over time once liquidity picks up in the large cap space. For today, we expect the index to trade within the 1,680 to 1,690 range. Among heavyweight stocks, Maybank fell 4 cents to 10 ringgit and 46 cents, while CIMB, Public Bank and IHH Healthcare slid 3 cents each to 8 ringgit and 20 cents, 4 ringgit and 51 cents and 8 ringgit and 57 cents respectively. Tenaga Nasional was unchanged at 13 ringgit and 78 cents. On the most active list, MQ Technology and AHB were flat at 8.5 cents and 3.5 cents respectively. Zetrix and Perak Transit eased half a cent to 81.5 cents and 27.5 cents, while Mega Fortis gained 1 cent to 89 cents. Among top gainers, Hapsang rose 8 cents to 2 ringgit and 90 cents, while Keen Hin and Country View advanced 6 cents each to 1 ringgit and 29 cents and 2 ringgit and 99 cents. Yung On added 5 cents to 1 ringgit and 58 cents. Top decliners saw Vitrox fall 7 cents to 4 ringgit and 8 cents, while United Plantations and SD Guthrie lost 6 cents each to 30 ringgit and 18 cents and 5 ringgit and 69 cents. Press Metal and QL Resources slipped 4 cents each to 7 ringgit and 18 cents and 3 ringgit and 79 cents respectively. Moving on to our local currency and foreign exchange. The ringgit extended its rally, opening slightly higher against the US dollar on Wednesday as the greenback weakened after the release of the Federal Open Market Committee FOMC meeting minutes overnight. At 8 a.m., the local currency edged up to 4.0425 or 4.0540 versus the dollar from Tuesday's close of 4.0460 or 4.0505. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Abdul Rashid said the FOMC minutes initially lent support to the US dollar, but cautioned that monetary easing amid higher inflation risks undermining policy credibility in managing the economy. He said the US dollar index DXY rose 0.21% to 98.238 points as US Federal Reserve Fed officials were divided on the outlook for the Fed funds rate, with some favoring a move closer to the neutral level to forestall a slowdown in the labor market. However, easing policy in a higher inflation environment could backfire and weaken monetary policy credibility. On that basis, the ringgit may trade between 4 ringgit and 5 cents and 4 ringgit and 6 cents today. IPPFA Sdn Bhd's Director of Investment Strategy and Country Economist Muhammad Siddiq Jantan said the minutes suggested that future rate cuts would be slower, more contested and more data dependent than previously assumed. He added, by revealing a deeply divided committee and a willingness to keep policy restrictive for longer if inflation risk persists, the Fed has effectively lifted the expected path of US real interest rates. This strengthens the dollar's yield and safe haven appeal, weighing on emerging market currencies, including the ringgit. At the open, the ringgit traded higher against a basket of major currencies. It strengthened against Japanese yen to 2.5850 or 2.5926, rose versus the British pound to 5.4440 or 5.4595, and appreciated against the euro to 4.7479 or 4.7614. The local unit was mixed against ASEAN peers. It advanced against the Singapore dollar to 3.1474 or 3.1566, was little changed against the Indonesian rupiah at 241.0 or 241.8, and was almost flat versus the Philippine peso at 6.87 or 6.89. However, it eased against the Thai baht to 12.8460 or 12.8924. Now for some local economic news. Malaysia's trade sector showed resilience through most of 2025, delivering moderate and sustained growth amid a gradual recovery in global demand and firmer external conditions. The year began on a positive note, with January marking the 13th consecutive month of year-on-year growth. Total trade rose 3.1% to 241.95 billion ringgit compared with the same month in 2024. Now, February maintained the momentum, expanding 5.9% to 223.89 billion ringgit, while the trade surplus rebounded to 12.62 billion ringgit, continuing a streak of surpluses that began in May 2020. March saw trade reach 249.89 billion ringgit, the highest ever for the month, driven by a 6.8% jump in exports to 137.31 billion ringgit. Imports, meanwhile, fell 2.8% to 112 ringgit and 59 billion ringgit. April registered even stronger growth, with trade surging 18.2% year-on-year to 261.94 billion ringgit, the highest monthly value since August 2022, supported by robust increases in both exports and imports. Meanwhile, May continued the upward trajectory, with trade hitting 252.48 billion ringgit, another monthly record. The pace slowed slightly in June, with trade dipping 1.2% to 234.85 billion ringgit, though the first half of the year still recorded a cumulative 1.465 trillion ringgit, the highest ever for first half trade. July saw a rebound to 265.92 billion ringgit, with exports climbing 6.8% to 140.45 billion ringgit, reflecting sustained global demand for Malaysian goods. August recorded a minor contraction of 1.9% to 247.07 billion ringgit amid shifting global trade conditions. Exports, however, continued to grow, while imports fell 5.9%, while imports declined by 5.9% to 115.47 billion ringgit. By September, trade recovered strongly to 257.51 billion ringgit, led by electrical and electronics, E&E products, machinery and optical equipment. October brought record high trade of 277.65 billion ringgit, with the manufacturing sector, particularly E&E and optical and scientific equipment, driving growth. November continued the momentum, recording double-digit growth of 11.1% to 263.83 billion ringgit. On a year-to-date basis, Malaysia's trade has reached 2.77 trillion ringgit. Still on local news updates. The Sultan of Pahang, Sultan Abdullah Riayatuddin Al-Mustafa Bilal Shah, and the Tengku Ampuan of Pahang, Tunku Aziza Aminah Maimunah Iskandaria, have extended their New Year wishes for 2026 to the people of Pahang and all Malaysians. To mark the arrival of the new year, their Royal Highnesses also prayed for the continued well-being, good health, safety, harmony and prosperity of all citizens. In a post on the Pahang Royal Family Facebook page, they say, "May the year 2026 bring a new ray of hope, strength of spirit and success in navigating life's challenges." They also expressed their hope that the people would remain united, continue to respect one another and uphold good values to preserve societal harmony and the prosperity of the beloved state and nation. The Sultan and Tengku Ampuan said the new year offers a fresh start to strengthen resolve, redouble effort and strive for personal growth in pursuit of a brighter future. Furthermore, their Royal Highnesses invited all citizens to join in prayer for the state of Pahang and for the country to be spared from all forms of tragedy and calamity, including storms, floods and earthquakes. They then said, in conclusion, may Allah SWT continue to bestow His mercy and blessings upon Pahang and Malaysia as a whole. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with more corporate news developments in Malaysia. AME Real Estate Investment Trust REIT is an emerging industrial focus REIT with scalable growth prospects supported by strong sponsor backing, according to Afin Huang Investment Bank Berhad. The firm said the REIT's earnings are underpinned by its sponsor, AME Elite Consortium Berhad, an industrial developer with more than 25 years of experience in delivering environmental, social and governance ESG compliant industrial assets. In a note, it said AME Elite's 4.7 billion ringgit development pipeline provides clear medium-term acquisition visibility, while its strong balance sheet offers flexibility for future debt-funded acquisitions. With an annual acquisition target of 100 million ringgit, the REIT is well positioned to sustain its growth momentum. Afin Huang added that AME REIT's earnings outlook is supported by net property income growth from 7 assets acquired over financial years 2025 and 2026, which are expected to collectively contribute about 22% of the REIT's annual NPI. Positive rental reversions from 23.8% of expiring net lettable area over financial years 2026 to 2028 further reinforce its growth prospects. The firm said that given AME REIT's full exposure to floating rate borrowings, it stands to benefit from easing lending rates, which would help moderate financing costs amid its active acquisition program. It said, all in all, core net profit is projected to rise by 4% to 16% year-on-year to between 40.1 million ringgit and 44.2 million ringgit, while distribution per unit DPU is expected to increase to between 8.6 cents and 9.2 cents over financial years 2026 to 2028. On this assumption, AME REIT's DPU is forecast to deliver a 10-year compound annual growth rate of 4.2%. Afin Huang initiated coverage on AME REIT with a buy call and a target price of 1 ringgit and 90 cents. The firm favors AME REIT for its Grade A and resilient industrial asset portfolio, strong sponsor pipeline that provides structured acquisition visibility, and potential yield upside supported by 4% to 16% DPU growth over financial years 2026 to 2028. Key risks include a moderation in industrial activity, a slowdown in acquisition execution, and a prolonged period of elevated overnight policy rates. Up next, we have some business news update. Sunview Group Berhad's proposed 70 million ringgit acquisition of a 50 megawatt large-scale solar LSS4 plant in Pahang offers medium-term earnings upside, but raises concern over balance sheet strain and elevated valuation. TS Securities said while the deal aligns with Sunview's strategy to expand its renewable energy generation assets and build a recurring income base, the company is likely to draw down additional borrowings to fund the purchase. In a note, it said as at end financial year 2025, its gross cash stood at 55 billion ringgit, with net gearing at 70% relative to the 70 million ringgit purchase consideration and additional funds required to complete construction of the plant. Sunview has proposed to acquire the solar plant from PKNP Renewco Surya Sdn Berhad for 70 million ringgit in cash under a tender exercise. PKNP's holding company, Renewco Berhad, became an affected listed issuer under Practice Note 17 of the main market listing requirements in February 2024, which led to works on the solar plant being halted and the asset being placed under receivership. Completion of the plant is expected to require a further 50 million ringgit to 120 million ringgit in funding. TS Securities maintained its sell call on Sunview with an unchanged target price of 35 cents, citing stretch valuations of 19.6 times forecast earnings for financial year 2026. The solar plant located in Pekan is about 79% completed and is targeted to achieve commercial operation by the fourth quarter of 2026 once construction resumes. On the positive side, TS Securities said the project could deliver an internal rate of return of between 6% and 8%, assuming total capital expenditure of 130 million ringgit to 150 million ringgit. The plan, for which Sunview is appointed engineering, procurement, construction and commissioning (EPCC) contractor could also lift the company's annual earnings by about 22% under an assumed 80-20 debt to equity financing structure. As EPCC contractor, TA Security said Sunview has hands-on knowledge of the plant's design and technical specifications, which helps mitigate execution risk for the remaining construction works. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Genting Berhad said its unit Genting Vista Berhad has issued its maiden series of medium-term notes with a nominal value of 3 billion ringgit under a newly established 5 billion ringgit unrated MTN program launched earlier this month. Sunview Group Berhad said it is acquiring a halted large-scale solar project in Pekan Pahang for 70 million ringgit in cash from PKNP Renuco Surya Sdn Berhad. Apex Healthcare Berhad said its voluntary takeover offer has surpassed the 90% compulsory acquisition threshold, enabling the offerer to acquire the remaining shares and proceed with the listing. Saipark Resources Berhad said its unit Saipark Renewable Energy Sdn Berhad has fully redeemed its outstanding tranche 1 perpetual sukuk amounting to 235 million ringgit. And last but not least, Sita Global Berhad said Datuk Shabaruddin Ibrahim, Executive Chairman of Mutiara Perlis Sdn Berhad, has emerged as a substantial shareholder with a 9% stake. Now that's a wrap for Midday Roundup with me, Ainun Jaria on Kleverstock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.